market fundamentals with Ajay Srivastav, who represents Dimensional Consulting. Ajay, let's start with politics for a change. Are markets somewhere secretly happy that Pranab Mukherjee is no longer the finance minister of India? Are markets happy to see he's back?
I would guess so. I think the level of inaction that we have seen for such a long time could dictate that we are happy at least that there could be some change happening for the sake of change, if at all. So to that extent, yes, and I think what happened on Monday kind of convinced everybody that it's good time to have a change. I think that was a disaster. Monday was a disaster. A lot of Indians, people lost money in the market. You lost kind of faith in a pronunciation of the finance minister saying that big bang reforms, and you come up with three small, technical issues. So in a manner of speaking, yes, we expect that some changes will come. There'll be some freedom, some new thinking will emerge. Because it's, we're reaching a crisis point at the end of the day. So when are you going to act? That's the point. So we're all hoping that now at least this is out. Now the new events are in, the Prime Minister is in the saddle. At least there is no one hierarchy has gone between decision making. So we will see hopefully faster action compared to what we had seen in the past. And we live on hope.
So Ajay, how soon could we see some reforms kick in? And do you think it is only going to be after the presidential elections, which is in late July?
No, I don't think there is any reason to wait for the presidential election. But see, what is the reform package of Government of India? They have just two-line agenda today saying FDI in retail, FDI in aviation. I haven't heard a third point of agenda to say that what is the next to the reform. The reform is how do you energize our export industry. The reform is how do you cut the inflation in this country. The reform is how do you pass on the cost to the sectors which are consuming it. The rural India, which is totally subsidized. How do you pass on? A Delhi consumer is easy target. You can keep hiking increase to next 20 rupees a unit of electricity. He is the easy target. The real target is that number of states are giving free power to the farmers, which is what is happening in India. The transmission distribution losses are the thefts. Those are the real targets. Urban India is the easiest target in the world. So I don't understand the reform today. I think the reform for the government today is two-point agenda, FDI retail, FDI aviation. Correct my understanding, what is the third point on the agenda then?
Ajay, now let's look at the bright side. The Prime Minister's office or the PMO office has been very active in the power sector. On and on, we've got indications and signals from the Prime Minister's office that they're committed to really, to provide coal to this nation. Do you think it's a matter of not months but days? We could hear something from that front?
See, when you say reform, providing coal to the coal station, is it the job of a PMO office? Just think about it, Kunj. Is it a normal commercial function should work on its own? I live in the Millennium City, so-called Millennium City of Gurgaon, which doesn't have power for 14 hours a day. Now, does it need a PMO office to get involved to get coal to power station or power stations to give power to your cities in this country? That's bizarre. That's not reform. That's operational dynamics. You're asking a company MD that can you start sitting on and finding out that raw material supplies to your plant. Then you're asking for trouble. If this is the level of action which has to reach the PMO office, then who's going to take strategic decisions? We are becoming uncompetitive. We are losing exports. Our balance of payment is out of whack. Capital is scarce. What about those decisions? This is not the job. And what can they do, PMO? Can they monitor everyday dispatches of coal to somebody? That's not the job. They can't do it. So, we're talking of reform on one level, and the other side saying PMO should get involved in monitoring coal supplies to power plants. It's bizarre. Where in the world does the government sit on coal supplies to power plants? Nowhere in the world. So if that's the job of a PMO office, then who's going to look at the big ticket reforms, which we need today to make us competitive? Ultimately, we need to earn foreign exchange to meet our import obligations. You see the headlines today, Business Standard. RBI looking at imposing curbs on gold coins. Come on. What are you talking about? An ordinary man is saving into gold coins and he's saying, let's look at curbs on that. This is what I said, bizarre thinking. The reform has to be a core strategic steps country takes to become more competitive, to make the economy grow, not to handle daily issues and RBI not to say gold coins should be sold by banks and not to be sold by banks. That's not reforms.
Sajay, what is your tactical view on the market? With the Brussels summit ahead going to kickstart tomorrow, the global market still edgy, and now more contagion effects of Spain is something which the markets are fearing. You've got the policy meet by the month end and pretty much nothing in sight when it comes to reforms in India.
See, we have been sharing our views across last 2 years. We have reduced the allocation of most customers and ours own to equity to, I think, the lowest. We were at one point of time even 5% in equity market, rest everything had moved out. We haven't changed our stance. Maybe a little bit increase in exposure. We haven't changing our stance. I'll sum up in one sentence that we are not compelled to sell today in this market, but we're not really convinced to do a big buying in this market. So there is no, people can talk of the rally. The market has shown resilience. You can't argue with the market. It's not gone down in spite of so many bad news, which is a good part of the market. The bad part is that this is fine, resilience is fine, but where is the growth story going to come from? We have lots of headwinds coming out, both internationally and domestically. Where is the safety? If I'm getting 12 to 14% return guaranteed in the market, can I get that in the equity market? The answer is no. The volatility has been good, so some people can say you can make money, but I can tell you, I've shared so much with other traders in the market, it's become very difficult to make money in this market. So tactically, I don't think it's a sellout, but I think strategically, it's not a big buy-in in the market. And people think they can make money in trading. I don't think it's easy in this market. At least we didn't find it easy in this market to make money.
Ajay, I'm just curious to understand from you, when you said that you have ideas where you're getting a 13 to 14% assured return, which asset class in India is giving a short 13 to 14% tax-free return?
See, I didn't say tax-free, I said assured returns. Okay, I didn't say tax-free. If you look at the commercial real estate, the office space in this country, you can easily invest at the lower end is 11, at the upper end is 17, guaranteed from A-class developers. That's a kind of option in the market. Even the FMP are returning returns of 10.5 to 11%, which are mutual fund return. Debt schemes are giving about 9%, FDs are giving about 9.5, 10%. So that's a minimum guaranteed return in the country, 10% to 12%. And you go to real estate, we're talking about 17% in commercial real estate. So if you are assured of those kind of returns, there may be some appreciation in real estate prices. Why would you risk, where is the expectation of a 25% return in equity market today? I don't think last 2 years we have seen it's been a washout. Leave aside the first 2 months of the year, which were a kind of aberration. And where is the returns coming? So point is, other avenues to invest are safer, secure. Market is not exactly welcoming. Is resilient? Yes. But is it welcoming big ticket buying? I guess the answer is no.